All right, guys, welcome back to another episode here on the Dividend Dogo show on YouTube, and I'm bringing you into the weekly performance for the portfolio. This is for the week ending 7/16. It is Sunday morning. It has been a busy week and a busy weekend. I am bringing you this video and this update a little bit later than normal, but we're going to dive right into it. As you can see, we came down from all-time highs. However, that's the stock market. That's the flow of things. As you can see, we dropped down a little bit here, about $4,300 in overall gains. We did have some dividend income come in that kind of offset this. The overall market loss in this scenario on paper was $5,739.30. Now, the reason why this number stayed up higher than it was is because I did do some buys this week, and I will dive into what those were. VST was down a little bit for this week, and the finance sector got smacked real hard. So let's jump into that and take a look. Bank of America dropped 5%, Bank of OZK dropped 5%, and JP Morgan dropped 2%. 2.5 basically, and overall I think that's partially just because there's a lot of indecision and a little scare on the world state right now, and I'm just kind of curious to see how the finance sector is going to recover, because overall, when I look at this on a 1-month scale, it's still a little rough. It's not that bad, but it's still a little bit concerning. As you can see, also energy is down on the month as well. But as far as 1 week goes, this is just kind of what has come to be the normal flow for me as far as what it looks like. The portfolio goes up quite significantly some weeks, and it comes down a little bit some weeks, and you have to be okay with just writing that out. And it's really easy as a dividend investor, specifically with this portfolio, to look at it and just be exceptionally happy that, look, another $1,300 is coming into the portfolio soon, and seeing those updates constantly really help me keep my mindset focused on growing the dividend income and being consistent about doing purchases. And for this week, we did have a couple buys. As you saw, I had been saving a little bit of cash for a couple different reasons. The primary one being that I had the shares of BST coming out, and I wasn't exactly sure. I had mental mathed that out at about $800 that was going to come out for that, but I wanted to make sure I had that cash balance built up until that money was taken out for those shares. Now, those shares will end up going into the monthly dividend stock portfolio down here. These are my monthly payers. Now, I would not suggest that anyone ever go out and buy the shares at these relatively inflated prices. When I bought most of these, it was almost 2 years ago for these stocks. I haven't really added to this pie very much at all, the monthly dividend stocks pie, but it has done overall pretty decently, and a lot of that is because of the money that was put into BST. So when the rights offering came in, I went ahead and accepted that, so I should be getting some additional shares added to this position by the end of the month. It's not a ton. It's going to come out to be, I think, about $800 total, so it'll add, I want to say, 11 shares to this position overall. So that will build up the monthly income that's rolling in every month just slightly. The other thing that we had for purchases, ABR was my purchase for this week. It was one of the two in addition to the shares from BST. ABR has been a workhorse in my portfolio. This additional purchase added, 63, almost 64 shares of ABR. Overall, my position for ABR, this is a REIT. This is an interesting position that I've wanted to build up. You can see it was down a little bit this week, and that's partially, I wouldn't say it really affected my decision to buy into it this week, but it definitely is nice to buy in when something is a little bit red. So looking at this overall, my share price on this is $12.70, and the market price right now is $17.72. So as you can see, if I had invested in this in the past further back, it would have been significantly higher for the yield. Because right now the yield is 7.12%, and that's at $17.72. So I believe that this was somewhere around 9% yield when I originally purchased these shares. And I've built up this position a little bit over time, but their dividends are rolling in and they're relatively consistent. I absolutely have been impressed by this capital appreciation as well as the dividend income that's come from this particular position. When I go in and I look at ABR overall, of my total portfolio, it's only about 0.76%. And I kind of want to bring that up to about 1% of the portfolio overall. My endgame goal with having REITs in the taxable position is to not be getting more than about $20,000 worth of income from REITs when we go to retire, because on the FIRE journey, we want to have as little high tax. We want the qualified dividend income tax being significantly higher than this. However, because of standard deductions, you can have about 20 grand of flex room to be able to wiggle with for tax reasons. So eventually I do want to build up some of my positions in the real estate side a little bit more. And as you can see, I've been teetering on the idea of adding Vicky. This seems to be the stock of choice for the Joseph Carlson Discord right now. I went to Vegas recently, and it's almost back to blooming, other than not having shows running. It seemed like everyone was ready to get out and celebrate life and take a vacation and de-stress a little bit. So this is a position that I'm considering added to, which has about a 4% yield, a little over 4% yield, and ABR has just been a solid workhorse. As you can see, overall time, it may have been down a little bit this week, but overall, it's done a fantastic job with its money weighted average return over the past 2 years. Now, the anniversary for this portfolio is coming up in about 3 weeks, and I want to take a snapshot of, when I started, because this position was originally in the portfolio on August 6th, the real estate pie, and to see that it's gone from 1,500 to 25,900 in just the course of 2 years is kind of wild to me. And I kind of want to take little snapshots of some of these pies and look at that on the 6th. And I might do a little video of, the before and after shot of what 2 years of staying consistent and investing as much as we could has done for the portfolio, and just seeing this roller coaster go up. So I do want to talk about and briefly mention the other stock that I did purchase this week. That was, I'm still here. That was Hingham Institution for Savings. This is a banking stock. This is just a boring value play overall. I'm very hype on the banking sector. I want to get a little bit more money into the banking sector, and this is one that looks really good on my radar. After being suggested some info from a friend, I went in and researched this company a little bit and was like, yeah, I want to add some position, add this as a new position and add a couple shares. It is an expensive stock, but it definitely has a bright future from what I'm seeing from the numbers. So as always, I do want to thank you for coming along this journey, viewing the portfolio, the weekly performance. As you can see, it was in the red this week. Let's hope for a green week next week and get back up over that 600,000 mark. And hopefully I will be able to add a little bit of money to the portfolio. As you can see, we got some more dividend income that came in. So I will definitely be pushing to take a look at and see what I can do this week as far as getting some more money into the portfolio, and then taking a look at what we can buy for adding some extra income into the portfolio. I do want to thank you all for watching. and remind you that the M1 Finance position, all of these, you're seeing it over time, what I've done, the work that I've put in for this, that my wife and I have, all the sacrifices we've made for the past 2 years to make sure that we were investing for our future, that it works. Overall, you can see the gains, you can see the dividend income. If I look at 1 year, just 1 year of dividend income, I'm looking at $21,000 in income in just 1 year in the portfolio. And this is growing and growing, and it's just going to keep getting bigger until it overtakes what we need to be able to be financially independent and retire early. And M1 Finance was my platform choice to do this because it's very easy to display this. It's pretty easy to use. I can set up auto invest and just have it throw the money where I want it to. It's pretty fantastic overall, and I've been pretty happy with the platform. And I would encourage anyone who's looking to start a new portfolio to take advantage of the free money that they are offering with the promotion this month. If you invest just $100, they give you $50 for investing using the referral link down below. And I also get $50, which is a huge perk. It's the biggest promotion they've done to get new people on the platform and get them started investing. Imagine just starting your portfolio and being up 50% right off the bat. That's a phenomenal way to start, and then you compound and build your investment journey from there. So I do want to thank everyone who has used the promotion, and everyone who comments, likes, and watches these videos, especially the ones that watch it to the end. I do greatly appreciate you, and I'll be coming back at you very soon here with a new video and a new update on how everything is doing. And I do appreciate every single one of you. Thank you very much, and I do hope you have a very blessed weekend, and good luck in the markets this week coming up. Could be rocky, could be all green, and that's the dice you play with the stock game. Have a great weekend. Enjoy the last of your Sunday afternoon.